Chalo. Very good morning, guys. Warm welcome to the best lectures of FM, SM and Audit nationwide. दोस्तों आप सबका बहुत बहुत warm welcome. Let's start right away. Okay, we were discussing leverages. So quick recap of whatever we have discussed and we will go ahead. Okay, what do you mean by the word leverage? Before we start leverage, okay, let me quickly tell quick revision of theory section because today it's going to be the last day of this chapter. Main aim of any company is to increase the wealth of equity shareholder, but when I increase the wealth means if I increase the market price, I need to take more risk or less risk. Of course, more risk. There are three types of risk: business, financial, combined. Business, financial, combined. What is business risk, guys? Okay, business risk is uncertainty associated with EBIT. I might not be able to earn EBIT. Why does that happen? Due to fixed operational cost like rent, depreciation, salary. What do you mean by financial risk? It is a risk associated due to use of debt in the business. Okay, additional risk will shareholder will face if there is more debt. What is combined risk? It's combination of business and financial. I hope you are clear. Yes, sir. Now, to measure this risk, I calculate leverage. For business risk, we have which leverage? Operating leverage. For financial risk, we have financial leverage. For combined risk, we have combined leverage. I hope you are clear. I hope you are clear. Yes, sir. Leverage means influence or power. The power which one variable has to influence another. In English, we call this power as leverage. Okay. It's the relationship between two or more variables. Okay, in a business firm. Okay, so more leverage means more debt is equal to more assets is equal to more risk is equal to more return. Okay, now what does leverage mean? Okay, operating leverage means if my sale will increase by X percentage, how much will EBIT increase? Percentage change in EBIT upon percentage change in sale. Come to DFL, degree of financial leverage, difference between EBIT and EBT, percentage change in EBT upon percentage change in EBIT. Instead of EBT you can also take EPS. Okay, last one. Okay, combined leverage. What's combined leverage? If you change your dash by this, what? If you change your say percentage change in EPS or percentage change in EPS or EBT divide by percentage change in sales. We have second formula also. Okay, operating leverage, contribution upon EBIT. Financial leverage, EBIT upon EBT. Let's come to the last one. Okay, there EBIT cup. So contribution upon EBT. I hope you are clear with all formula. Absolutely clear. Any doubt in the formula section? Kindly like the video so we know that voice and audio and video all clear. Good morning, Acharya. Good morning, Swati. Good morning, Soni. Good morning, Aisha. Very good morning. Why do I learn leverage? Because I will know what price to set. At least cover the fixed cost. Okay. All good? Shall we go ahead? Yes. Chalo. Moving on. Which is the last sum we did? Which is the last sum we did? Comment is not coming only. Okay. Eighth one we did. Okay. Let's come to ninth one, guys. Let's come to ninth one, guys, very quickly. All are exam sums. Okay. Can we start? Yes, sir. Come there. From the following, RTP May 21 means RTP, revision test paper ICI gives. Following information is extracted from newly incorporated textile limited. Sales is 15 lakh. What do you mean by PV ratio, guys? Sir, PV ratio, if you don't know, I will tell you. It means profit volume ratio, or you can also say contribution. Operating leverage is 1.4. Financial leverage also given. Use the concept of leverage. Find out and verify. You don't only find answer, but also they are saying verify. What to verify? If your taxable income will change by this, means if your EBT, okay, will change by this, sales, how much will EBT change if sales will change? So what they are saying, percentage change in EBT upon percentage change in sales. I want to let you know, but I want you to tell me which formula will apply here. Right, sub point 1, tell me if I want to know percentage change in EBT, if sale will change by this much, with how much EBT will change, which formula will be there? You have to reply. I am waiting for your reply. Come to second, if your EBIT will change by this, okay, if sale decrease by 10, which formula will come here? Third, percentage change in EBT, if EBIT will increase by 15%, EBIT increase by 15%, how much will EBT increase? Which formula will come here? Okay, all three answer. Very good, Srinivas is giving. Sir, here combined leverage will come, he told. Very nice. Tell me in second, percentage change in EBIT upon percentage change in sale, operating leverage will come. And of course here, percentage change in taxable income, EBIT, percentage change in EBT upon percentage change in EBIT, financial leverage will come. If you want, you can write. Now sum is very easy. Okay, what we will do is normally calculate once. Okay, let's calculate for base year, and then for new year we will see what will happen. How do we verify? Let's calculate for the base year. Okay, start. Base year. सरबोझ उतार दिया देख तेरे खून तेरे जिम्मे तो मार दिया. Start. Sum number 8. Shall we close this? No. Nothing we can close. This we can close. Chalo. Sum number 9. Income statement of Textile Private Limited. What the hell? Hey. Tell me, what will be the format? Okay, very simple. Particulars and rupees. Tell me, what is the normal we will apply? Sales we will write first. Sales 15 lakh. I don't know variable cost, but I do know contribution. So variable cost will be balancing figure. Contribution is how much percentage? 70. 70. 10 lakh 50,000. How you are getting this? PV ratio. You should write near PV ratio, contribution. See, more you will write right now, in exam you will feel the relief. Many people don't write. Today I know. Tomorrow you will forget. Tomorrow you will forget. So you have to write maximum things right once. Once you write, your brain will accept 7 times. Okay. Though you know it, I know you know it, but still you need to write. Clear? Till here, no problem whatsoever. Now, how do I know? Okay, let me just draw format. I don't know rest of the things. So I will just draw format. Clear till here? Yes, sir. Now what I will do? Find out the balance things by drawing a working note. By drawing a working note. You go to side now. Working notes. First working note is what? Okay, I need to find out contribution upon EBIT. So I will get EBIT. Right there, operating leverage is equal to contribution upon EBIT. Tell me, what's the formula? 1.4. So contribution I have got, I think 10 lakh 50,000 upon EBIT is how much? I don't know. Let me cross multiply. I should get the answer. 7 lakh 50,000 is my answer. So I'm writing EBIT is how much? Clear? Contribution upon EBIT. Very, very simple. Let me just substitute it there. So 3 lakh will be fixed cost, balancing figure. I hope you understood. I hope you understood. Now I can get financial leverage 1.25. Okay, financial leverage formula. Tell me, how will I apply this formula financial leverage 1.25? So I'll write here. Tell me what is EBIT? What is EBIT? What is EBIT? 750. So how much will be EBT now? Very simple. 750 upon 1.25. 6 lakh rupees. So I will write here 6 lakh. Interest will be 1 lakh 50,000. As simple as it could be. We are done, guys. I hope you are clear. I hope you are clear. I hope you are clear. With this, we are done. This is a base year. Okay. You can write here, this is the base year. The year which is given. But one more thing we could calculate. Combined leverage. Let me just calculate. They have not asked. Is ole 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 OL into FL. What is OL given here? 1.4, 1.25. Just multiply. I will cross multiply 1.4 into 1.25. 1.75. Any doubt? No doubt whatsoever, sir. Absolutely perfect. Okay. Now, what I will do? Now, what I will do? Now, what I will do? Using the concept of leverage, find out and verify in each case. Don't just find out. Also verify whether answer is matching or not. Okay. So we can easily do it. Come to point number 1. Everyone copied till here. Ideally, you have to do together only. In our class, there is no copying. If you are done, type yes. We will go ahead. Okay. A lot of people are writing yes, it means it is done. Shall we go ahead? Done. Okay, okay, okay. Very good. Go ahead. If taxable income sale will increase, then taxable income will change by how much? It's the formula of combined leverage. Percentage change in EBT upon percentage change in sale. Combined leverage formula will be there. Okay. So write here 1. Combined leverage no problem is equal to percentage change in EBT. See, EBT is which variable? Dependent on what it is dependent upon? Independent. Percentage change in sales. So this is 1.75 is equal to percentage change in EBT. Tell me percentage change in sales is how much? Percentage change in sale is how much? 15%. Okay, so I'll write you. If sale will increase by 15, my EBT will increase by 26.25. I hope you are able to understand. I hope you are able to understand. I hope you are able to understand. If my sale will change by this much, my EBT will change by 26.25%. Any query? Any query? No. Now let us verify. So new EBT will be how much? New EBT is how much? Okay. New 26.25% more it should be. How much is the old one? How much is the old one? 6 lakh. So 6 lakh plus 26.25%. Just do plus. Automatic answer will come. 757,500. Now they are saying this answer you got, we agreed. We agreed. But why don't you verify? So I have to do what? I have to literally increase my sale by 15% and do all calculation again just to check whether answer is matching or not. Okay, right there. Let us verify the same because they have told. But this verification is not fair. It's like a rough thing. Okay, but we can directly write sales here. You have to increase the sale by 15%. How much is the sale? 15 lakh. So I will write here 15 lakh plus 15%. 17 lakh 25,000 less variable cost. This is 70% if I am not wrong. What was profit volume ratio? 70. So this should be 30%. 517,500. What do I get? Contribution. 12 lakh 7,500 less fixed cost. How much is fixed cost? 3 lakh and interest 150. 3 lakh. Tell me, contribution minus fixed cost, do I get EBIT? Yes, sir. 9 lakh 7,500 less. What will I do? Interest. Interest is how much? Interest is how much? 150. 150. Yes, sir. EBT. My answer should match. It is matching. 757,500. Means whatever I have done is correct. I hope you understood. Little big but very easy. See how logical it was. Whatever they said we also verified and our answer came. Hopefully perfect. Understood? Yes, sir. Now let us do for second one same. I hope you understood the process. Now you can do on your own also, but still I will also do. No harm. Second, okay, tell me if your EBIT will change by this, sales will decrease by dash percent. So EBIT will decrease by how much? Okay, EBIT will decrease by whatever OL is there, right? Operating leverage. What do you mean by operating leverage? Percentage change in dependent upon percentage change in independent. Tell me which one is a dependent variable? Right there. Percentage change in. Tell me which one is a dependent variable? Okay, dependent is EBIT. Divide by percentage change in sales. I think they've already given how much OL should be. Okay, 1.4. So let me just substitute here. Sale is changing by how much they are saying? 10. So percentage change in EBIT should be 14. Yes. Percentage change in EBIT 14%. New EBIT. Sales is decreasing. So EBIT will decrease. Okay. New EBIT. Old minus 14%. How much is old? How much is old? How much is old? Check it out. Check it out. Check it out. Check it out. 750. So I will just do minus 14. Hopefully you will get the answer. Let's see. 645. Now we will verify the same. This is what? Doll. Baby doll में सोने दे. अब baby doll में सोने दे. ये दुनिया पितल दी. ये दुनिया पितल दी. Let us verify. Very simple, but good news here is what? Till only EBIT do. You don't have to do full. You don't have to do full. Sales will reduce by 10%. Okay. Sales will reduce by 10%. 15 lakh. 13 lakh 50,000. How did you get, sir? How did you get, sir? Simple. 15 lakh minus 10%. Okay. Less. Contribution. Tell me 30%. Sorry. Variable cost. Directly contribution also we can do. But okay. पहले भी मैं तुमसे मिला हूँ मिलके मुझे ऐसा लगा contribution just minus पागल पागल है दोनों less I am not even seeing how much is fixed cost has to be 3 lakh. Now how much did our EBIT come? 645. Wow, again answer matching. Yeah. Over, over, over. Copy, copy, copy. तूने छुआ जख्म को मेरे मरहम मरहम. Done. Last DFL, DFL, DFL. Come to third. What are they saying now? If EBIT will increase by 15, then EBT will change by how much? Okay. Financial leverage. Financial leverage. Percentage change in dependent variable, which is dependent EBT, upon percentage change in independent. Which one is independent? EBIT. How much is financial leverage? 1.25 is equal to percentage change in EBT. This one, if EBIT will change by 15%. So I will write here 15%. Multiply, 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 multiply. 18.75%. Tell me if EBIT will change by 15%, my EBT will change by 18.75%. It is increase. So new EBT is how much? New EBT is how much? New EBT is how much? Old one was 6 lakh if I am not wrong. Old one 6 lakh. No. 757. No. This is sum, no? Oh, long sum. 6 lakh old one is. Okay. So from 6 lakh I have to increase. Keep on adding, keep on. Today don't stop. Today don't stop. 7,12,500. Now let us verify the same. Okay. Let us verify the same. But we will start from EBIT only. We don't need to start full because they are saying if EBIT will change by this much. So let us start only from EBIT. Okay. Why did you start from it? They only gave. They only gave. So I have to add just 15% to EBIT. What is the old EBIT? 6 lakh, 750. 750 plus 15%. 862 500. Sir, you have to do less interest. You forgot. Oh, sorry, sorry, sorry. Less interest 150. 862 500 minus 7. Oh, all answer came. Wow. Nice. Amazing. Party. Done. Oh my God. 10 marks sum this is left. We could do in what? A lot of time it took, by the way. Hopefully it's done. Everyone is done. Then we will go ahead. Entire sum over. Any doubt, ask first. Any doubt, ask. No doubt, then we will go ahead. Shreya is done. Okay, Shreya. Others. Others. No doubt. Arvind also. One more will write. No doubt we'll go ahead. Chalo, done, done, done. Lot of people done. We are going ahead now. Next sum. Don't stop today. Don't stop. 14. This is 9. Let's move on to 14. Oh, big sum. Big sum. Big sum. Big sum. Instead of doing big, let's do a smaller one first. 15. And then we again go on to 14. Okay. After 15, we will do first, then 14. Come to 15. Relatively smaller. Lot of gaps to fill. Let's see if we can fill the same or not. From the following, just prepare income statement. So your sales are only not given. I don't know how we will get. Okay. Variable cost given, fixed cost given, interest given, financial leverage given, income tax given, sales not given. How we will find, I don't know. Now come to the B part here. Okay, in B what is given? 60% of sale, fixed cost not given, interest not given, sale given. Whenever such thing is there, close your eyes. Okay, first prepare the income statement which they have asked. Okay, once you draw that, automatic God will bring answer. The master therapy for doing all this is what? Don't take any tension. Many people just take calcium. Don't, no need to take calcium. Automatic you will know. Once you get one figure, all figure will be clear. But for that, you need to do only one thing. What? Just draw income statement first. Okay? Right. Automatic answer will come. Income statement of A and B Limited. Can we start? Why not? For whom you are waiting? Particulars A, B. Okay. Now what we will do? Draw a line. Draw a line. Whatever figures are available, you put those figures. If not available, just go ahead. Okay. Start. First figure is what? Sales. Sales we have only one. Okay, just draw full format, then we'll put the figures. If we minus fixed cost, what do we get? What do we get? What do we get? EBIT. After that, less baby interest. What we get? EBIT. Have you given tax also? Have you given tax also? Have yes, tax also given, guys. Here, your tax also given. Thank you, ICI. Have you asked us EPS also? No, no EPS. Now I will just substitute whichever figure I know. 56,000. From where you brought? From where you brought? Book. Fixed cost 20,000. Interest 12. Come to B, come to B, come to B. Interest 9. Sales 1 lakh 5. Variable cost 60% of sale in B. In B, it is 60% of sale. Let me calculate. 63,000. 42,000. Rest I don't know. Okay. So this much figure is also good. I know at least this much. If you are done till here, let me know. Now very easy, sir. This nothing we have done. We have just sorted out what they gave. Once done, type Y. If done, type Y. Chalo, moving on. Now, whatever they have given, just substitute. Just substitute. Just substitute. Okay. What we will do? Financial leverage is the only thing I know. What's the formula for that? Financial leverage normal formula. I cannot use change formula. Change formula can be used when there are 2 years. Here 2 years are not given. What's the formula? Operating leverage is contribution upon EBIT. This is EBIT upon EBT. Okay. So EBIT upon EBT. Let me use the formula. A. First I am doing of A. Financial leverage. EBIT upon EBT. What's the answer? It is 5. It is 5. It is 5. It is 5. Now I want to ask one more question. What is given? EBIT or EBT? Nothing given. Nothing given. Still we can get. Let us assume EBIT to be X. You can write there. So this is X. What is EBT? X minus interest. Yes or no? EBIT and EBT, what's the difference of interest? So I am writing X minus interest. Fortunately, they have given us interest. X minus 12,000. Is this interest correct? Let me check. Let me check. Let me check. Yes, sir. Just cross multiply. We will get our EBIT. 5x minus 60,000. How did you get? Multiply by 5 is equal to x. Okay. So 4x is equal to 60,000. X is equal to 15,000. That is EBIT. Understood. 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 Now once EBIT is done, everything is done. Okay. Once I get this figure, game over. First, let's finish the bottom part. 3,000. 3,000 into 30%. 900. 2,100. Over. Game over. Now here I will do what? Add back, add back, add back. If EBIT is 15 and fixed cost is 20, add back, country will become 35. Okay, very easy. If country is 35, variable cost is 56, add back 91,000. Oh, it was so easy. Yeah, yes, very easy. Okay, understood. Understood. Now this side, how to do them? This side. Ole, 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 ole. Contribution is given. I will find EBIT. Very simple. B limited. Contribution upon EBIT. Tell me, मेरी जान, बात जान, oh, here, ole, ole is 4. Tell me country is how much? Country is how much? Country is how much? Country, I don't know. 42, 42, 42. Just put it 10,500, 10,500, 10,500, 10,000. Understood, sir. 31,500. 1,500. 450. 1050. Check it out. Is everything good? Everything good. Everything good. Once you are done, type done, 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 done. 'Anything you can write, Swati? I told no. Swati has doubt. Financial leverage is given 3 is to 2. I told you that way also they can write 5 is to 1, 4 is to 1 or 4 times. Whatever you write, both is right. I had told you, Swati. I had told Swati. Done? Guys, girls, Swati. I had told both ways you can write. Shall we go ahead? If you are done. Done, 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 done. Others are not writing done, only God knows. Start. Come to question number 1414. Now bigger sum we will do. Get up, guys. Okay. Calculate operating leverage, financial leverage, combined leverage. Oh, ho, 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 ho. Again all three. From the following, situation 1, situation 2. Okay. And financial plan 1 and 2. So for financial plan 1, I have to do situation 1 and 2. For financial plan B, I need to do situation 1 and 2. Means 4 times I need to do all leverages. So 4 into 3, I think I will get 12 long answers. 12 answers will come, very big. 4,000 is installed capacity, but what's actual? I need to calculate on actual, not installed. 4,000 into 75%. Right there, 3,000 units. Selling price 30, variable cost 15. Fixed cost under situation 1. Okay, see situation 1 and 2 and plan A and B. So in plan A, situation 1, situation 2. Plan B, situation 1, situation 2. Okay. Fixed cost is 15 and 20. So in situation 1, 15, situation 2, 20. Again plan B, situation 1, situation 2. What are these different plans? Capital structure are given in different plan. A and B. A equity debt, B equity debt. Okay. This by mistake is 150. By mistake this is 150. Do 15,000. But it anyways doesn't make any difference. Okay, okay, okay. Yes, sir. Perfect. Amazing. Mind blowing. Excellent. Let us move ahead. Wow, wow. Too good. Shall we go ahead? Easy. Now tell me, okay, how you want to do? You want to do all four together, or first financial plan A, situation 1, situation 2. Then financial plan B, situation 1, situation 2. How you want to do? All four together or plan A, plan B? Reply little fast, we are getting late. Reply little fast, we are getting late. All four together. Very clumsy it will be, but okay. All four. Too much confidence, all are champion in FM. FM champion we have here only. All. Start. All four together. All are saying time is not there with me. I am not free person. These people are free. Okay. Give heading. Give heading. Particulars. Plan A. Plan A. Situation 1. Situation 2. Plan B. Situation 1. Situation 2. Okay. Now what we will do, sir? Just draw nice lines. Okay. So it's very easy. पहले भी मैं तुमसे मिला हूँ, तुमसे बिगड़ सुन के लगा जख्म को मेरे. Chalo, simple. Now what we will do? They have given a few things. Selling price is 30. So selling price will remain same under all. See, selling price and variable cost is same under all plan. What's changing is only interest and fixed cost. Only interest and fixed cost. Otherwise all same. They can we directly start with contribution also. Can we directly start with contribution if you want, or you will be confused? Can we directly start with contribution? Why? Because we only need to calculate leverage, no? Can we start with contri? Array, many people, if you don't want to start, what you do? They do 3,000 units into 30, then into 15. 3,000 units into 30, less 15 is variable cost. Contribution is 15. Can I directly start with contri? Because otherwise what will happen? You will ask me doubt after 2 minutes. Okay, if you want, you can start with sales. Less variable cost. Contri will come. I am directly starting with contribution. It means the same. So 3,000 into 15. 45,000. 45,000 right there. Contribution. How am I getting it? Fixed sales minus variable cost. Under all situations same. Less fixed cost. Very, very important. Very, very important. Situation 1, 15, 15. So in both situation 15. Situation 1, 15. Situation 220. Any doubt? Any doubt? No, sir. No, sir. No, sir. Sir, no doubt, sir. Okay. Now, EBITA, 30,000, 25,000, 30,000, 25,000. Less. Less. Don't forget interest. Interest. Int. Understood, sir. Don't shout, sir. See, plan A has different interest plan B. In plan A, 10,000 into 20%, 2,000. Both situations same. What is this situation? Array, maybe little bigger factory, so more fixed cost. Smaller factory, less fixed cost. Depends. Now here 5,000 only. So 5,000 into 20 is what? 1,000. Both place 1,000. What will I get? EBITDA 28,000, 23,000, 29,000, 24,000. Any doubt? Any doubt? Any doubt? Any doubt? No, sir. Oh, sir. Any doubt? Any doubt? Any doubt? Any doubt? No, sir. Over some. Sorry, guys, some over. Now let's calculate leverages, 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 leverages. I will write the formula in middle. Contribution upon EBIT. So let me write here. Okay, what is contri? What is EBIT? What is contri? What is EBIT? 45,000 upon 30,000. 1.5 times. For one, I will show calculation. After that, I will not show. In this sum, you want to write in proportion, then write like that. 1.5 is to 1. Let me not write times, okay? Because someone had pointed out, like you can write like this also. So we'll write like this. 1.8 is to 1. One 1.5. Again 1.8. Same answer are coming. Any doubt? No, sir. Come to FL. Come to FL. Tell me what's the formula? For one I will show, then I will not show. 30 upon 28. 1.07 is to 1. Hope you are clear. Continue. Come here. 1.09 is to 1. Come this side. Come this side. Come this side. Come this side. 30 upon 29. 1.03. 1.04. Now let me calculate combined leverage. OL into FL. Tell me, 1.07 into 1.5. 1.61 is to 1. 1.8 into 1.09. 1.96 is to 1. 1.5 into 1.03. 1.55 is to 1. Last one. 1.8 into 1.04. 1.88 is to 1. Which is better? Which is better? We have to give conclusion. We will write one line. Once you are done with this type Y, if you are done with this much type Y, if you are done with this much type Y, others must be still doing. So we'll wait. All done? It seems all are done. So now what we will do? Now what we will do? Now what we will do? That only you know, sir. Just write conclusion. Which is better according to you? Okay. Let's see. Tell me which one seems better. Okay. Here in financial plan B, situation 1 is better. Why? The leverage is least. Okay. So I will select which plan? This, because it has lowest leverage. Less leverage, less risk. Okay. Less leverage, less risk. Have they told me or no? First let me read. They have not told me also to select, but still I will select. Write conclusion. Write conclusion. Write conclusion. We will select situation 1 in plan B. We will select situation 1 in plan B. Right there. We will select situation 1 in plan B because 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 we will select situation 1 in plan B because its leverage is less, so risk is less. Because its leverage is less, so risk is less. You can also write conclusion then, because its leverage is less, so risk is less. You can also write conclusion. More leverage is equal to more borrowings is equal to more risk. Less leverage is equal to less borrowing is equal to less risk. If you want, you can write it's voluntary, not compulsory. Okay, because they have not asked in the sum. They have not asked in the sum. पहले भी मैं तुमसे मिला हूं. Shall we go ahead? Yes, sir. Easy sum. Then which one was there? Tell me. After this, which one we did? 15 done? Yes, done. 4. 4 is the last one. After 4, a new concept will start. Can we finish 4? This will take a lot of time. No problem. Start. We will finish 4. After that, new concept will start. Okay. After that, new concept will start. Preference dividend. Let's finish 4. Good base will be there. I think it will be 9:30. Then we can start the last concept and then take a break and solve more sums of last concept after the break. Firm has sales of 75 lakh, variable cost 56, fixed cost 6, debt of 45 lakh, equity of 55 lakh. What is the firm's return on investment? ROCE. Does it have favorable leverage? If it belongs to industry, forget all this. Forget all this. Forget all this. Okay, let me just do calculation and calculate these leverages. After that, I will come to everything. Okay, let me just do what I actually know. Okay, then I will explain you all points, all very easy. Okay, come to sum 4. Okay, name of company is given? No, just write income statement. The last sum from our old concepts. 1, 2, 3, start. Tell me, what will I do here? Okay, sales is given. Now let me not start with country because lot of things they have asked afterwards. So maybe I will need all. Okay, good sum, big sum. Sales 75 lakh. Less. Variable cost is how much? Tell me. Tell me. 56%. 42 lakh. Tell me, sales minus variable cost is what? Our own contribution. Our own contribution. 33 lakhs. Fixed cost they've given 6 lakh. After that, what will I get? EBIT. ₹27 lakh. Moving on. After this, what will happen? Less interest will happen. Less interest. How much? 45 lakh into 9%. Four lakh 5,000. Earning before tax 2295. Any doubt? No doubt whatsoever. Less tax is how much? Not given or given? I don't know. Not given. Tax they have not given. Okay. So till here, okay, all. This is normal income statement. We can calculate all leverages from here. So our fourth point will be done first. Okay. So I can write point number 4. Operating leverage is equal to contribution upon EBIT. Tell me how much is country? 33 lakh upon 27 lakh. Just do division. 1.22 is to 1. You can also write times. Okay. Financial leverage. EBIT upon EBT. Why such a formula? Difference between the both is just the interest part. Difference between both is just the interest part. 27 lakh upon 2295. 1.18 is to 1. You can also write now combined leverage. Just multiply the two. 1.22 into 1.18. 1.44 is to 1. Hope you are clear till here. Our leverages part is done. Now we'll move to all individual things one by one, line by line. Once everyone is done, let me know. Everyone is done, let me know. Done. Chalo. Now we will do all portion one by one. What do you mean by return on investment? Also known as return on capital employed. Very, very important formula in ratio we will learn. Hopefully ratio will start maybe today in the end or tomorrow. So for sure it will start. Okay. Now what are they telling? What's return on investment? How much you are getting? Always remember investment comprises of two things, debt and equity. So how much have they earned is EBIT. So return on capital employed formula is, if you don't know, return on investment or return on capital employed, both are same. You don't have to write, you don't have to write, you don't have to write, you don't have to write. This is very, very, very on the capital. How much have I earned? See, capital means debt or equity, both together is capital. Total capital is debt plus equity. How much have we earned for them? EBIT. If you tell me EBT, then that is only for equity. Why? Because we have removed interest. This is return on total investment, not equity investment. Always remember, return on capital employed means total return to debt and equity is what? Very simple, it's EBIT. Divide by on what you have earned this EBIT on this much capital upon capital employed into 100. You can never write here EBT. Why? Because EBT is after deducting interest. So it's only for equity shareholder or both equity and preference. We are asked return on total capital, not only shareholder fund. If you ask me shareholder fund, then it will be less interest. Whatever is left is for shareholder. But this amount, tell me who has earned? Equity people have earned or debt people? Together on entire my operating profit is EBIT. How much have I earned from my regular business operation? Okay, after that I deduct interest. So what's return on capital? Total capital upon my operating profit, my business profit, my routine profit. From that, of course, finance cost will go, that is interest. Did you understand the formula? Did you understand the formula? What's capital employed? EBIT upon capital employed. What is EBIT? 27 lakh upon capital employed is how much? They have given in the sum. 55 equity, 45 debt. So 1 crore. 27%. This is actually very good business. In no business there is a return of 27. Amazing, excellent, mind-blowing business. Whenever you invest in share market, you have to see two big ratio, ROCE and ROE. We will learn in ratio chapter. ROCE means total return on the business. What is ROE? How much I am getting for equity shareholder. Regarding that we will learn later. I hope you understood. Hope you understood. Just write formula of capital employed. Debt plus equity. Tell me how much is debt? 45 lakh plus 55 lakh. 1 crore. Absolutely clear? Then let me know. Type yes. Then we will go little ahead. Type yes. Then we will go little ahead. Understood this fully? What's my return on the business? Anyone tells you invest in this company, first ratio check in life is ROC and then check ROE. ROE we will check after we learn tomorrow. First thing is ROC. Tell me, never ever invest in a company which has no return on capital employed. Return is only not there. They are not able to earn. How will they give money to you? Very simple. Okay. Now, second, does it have favorable financial leverage? Okay, financial leverage is favorable. Means what? Means what? My borrowing. I am borrowing at 9% and earning 27%. Good or bad? They are saying financial leverage basically means borrowing. I am borrowing at 9 and earning 27. Good or bad? You tell me. They are saying, is our leverage good? Is our borrowing good for my business? Shall I borrow next time or not borrow? They are asking you as a CFO. Tell me, my borrowing percentage is 9 and earning percentage 27. Good or bad? Only one person writing. Then what's the use of shouting for logics? So much logical explanation we are giving, but you are not writing only. Right there. Right there. Second, then you study from local teacher only, who doesn't have any knowledge, keeps on shouting. A financial over. Full logic you are getting. First time in India. Deep insight. How to check financial statement. Local teacher are also there. What's the difference between India's best and local? Right there. For all of you who are watching, if you are not buying our class, your career is at stake. India's best class, full logic. Right there. Second, right there. Yes, our leverage is good because we are borrowing at 9%. Yes, our leverage is good because we are borrowing at, second answer, huh? Second. Yes, our leverage is good because we are borrowing at 9% and earning. Yes, our leverage is good because we are borrowing at 9% and earning 27%. And earning 27%. How easy it was. Had you read, you would have never understood deep meaning. We are borrowing at 9 and earning 27. Too good. Too good business. We are borrowing at 9 earning 2. Come to third. Come to third. Come to third. If firm belongs to industry whose capital turnover is 3, does it have high or low capital turnover? In 1 second over. What is capital turnover? On my capital, how much sale I am able to generate? On my capital, how much sale I am able to generate? Last time, on my capital, how much sale I am able to generate? Very simple. We will write formula first. Capital turnover ratio is equal to turnover upon capital employed. First, without seeing, tell me. Don't reply. Don't reply. Formula forget. On this capital, I can get turnover of this much. On 1 lakh, I can get turnover of 5 lakh. So, capital turnover is 5. On 1 lakh I can get turnover of 10 lakh. So capital turnover is 10. How much times of capital you can earn? You can earn, tell me, more the better or less the better? You have to reply more the better or less the better. You have to reply. On my capital, how much I am able to earn? How many times of capital I am able to earn? More the better. Very good. Now let's check it out for them. How much is the turnover? 75 lakh sales. Upon capital employed, you just calculated before 2 minutes, 1 crore. Only 0.75 times. Means of total capital employed, they are able to earn 0.75 times only. Let's see what the ratio of industry is. Oh, industry is 3. So if in normal industry this was there, 1 crore, they would be able to earn 3 crore. But this company, worst fellows who are able to earn only 0.75 times. So our capital turnover is bad. Our capital turnover is bad. Once you write this, type Y. So I will make you comment. We will comment. Done. Type Y. Done. Okay. Right there. Our capital turnover is low because our capital turnover is low because industry ratio is industry ratio is 3. Industry ratio is 3 and our ratio is industry ratio is 3 and our ratio is 0.75 times only, which indicates our ratio is 0.75 times only, which indicates, what does it indicate? Inefficiency. We are very bad, which indicates inefficiency. Simple meaning, my brother is able to get twice the marks of me, so he is better. I am inefficient. How much times of capital you are able to earn? Now this all the Chintu Pintu, you know. This all is your favorite. Let me just calculate formula. Now they have not told to verify, so we will not verify and waste our time. Okay, you are champion in verification. If you want, you can do. Sales increase by 10. What will EBIT increase? Tell me which formula. Percentage change in EBIT upon percentage change in sale. Which formula? Fifth one, which formula? Which leverage? I will not write. Fifth one, which leverage? Write that doll. Baby doll, me sone de. Next, at what level of sale EBT will be 0? At what level of sale EBT will be 0? Don't ask me how to do that. Understood? Okay, tell me which formula. Percentage change in EBT upon percentage change in sale. Which formula? Which formula? Which formula? Percentage change in EBT upon percentage change in sale. Which formula? DCL. Very good. DCL. Last one has to be DFL. EBIT. Over. DFL. Percentage change in EBT upon percentage change in EBIT. Let's do it. Fifth, sixth, seventh. Fifth. Operating leverage is equal to percentage change in dependent upon percentage change in independent. Tell me which one is independent? Percentage change in sales upon percentage change in EBIT. Tell me what is operating leverage formula? What's operating? 1.22. Now percentage change in EBIT upon percentage change in sale. Okay, so percentage change in sale is how much? 10%. Percentage change in EBIT will be how much? 12.2%. Clear, clear, clear. What percentage EBIT will increase? It will increase by 12.2 percentage. We will write one line once you are done. If you are done, we'll write one line. Right there. If sale increase by 10%, after you are done with this, write there one line. If sale increase by 10%, EBIT will increase by 12.2%. If sale increase by 10%, EBIT will increase by 12.2%. Now I want to ask you one thing. Please answer. You want to calculate and verify, type Y or N. Y means yes, N means no. They have not asked calculations. Do you want to calculate all? N, N, N. Okay, go ahead. At what level of sales? Here I need to give figure. EBT of the firm will be equal to 0. EBT will be 0. Let me do. First apply formula. Combined leverage is equal to percentage change in dependent upon independent. Which one is a dependent variable? Percentage change in EBT. Which one is independent? Percentage change in sales. What is the formula? 1.44. 1.44. 1.44 is equal to, is equal to, is equal to, is equal to. Now, percentage change in EBT upon percentage change in sale. Tell me, now at what level of sale EBT will be 0? For EBT to become 0, it is right now whatever figure. We are not knowing. To become 0, it should change by 100%. It should reduce. One more time. I don't know what is the EBT currently. But for EBT to become 0, okay, it has to reduce by 100%. Whatever the EBT is, don't see. Okay, let me see. Okay, come here. EBT is 2295. For it to become 0, it should reduce by 100%. Yes or no? Yes. So I will write here 100%. So percentage change in sale will be how much? Let me multiply. 69.44. 69.44. Just write one line there. If sale will reduce by 69.44%, EBT will be 0. If sale will reduce by 69.44%, EBT will be 0. If sale will reduce by 69.44%, EBT will be 0. If sale will reduce by 69.44%, EBT will be 0. Sale will reduce by 69.44%, EBT will be 0. See, how did I get this? Okay, EBT, whatever figure, to become 0, it has to change by 100%, 0. Okay, you are currently at 90%. If you want 0, you have to come by 90% down. No. Okay, so this. Now, this let us verify. If my sale will change by this much, will EBT be really 0? Let us verify. You want to check this? You really want to check this? Okay, now we have to write the figure first. Right there, right there, right there. Sales is equal to existing minus 69.44%. How much is the current sale? 75 lakh. Two lakh 29,167. Sorry, 22 lakh 91,667. At this level of sales, EBT will be zero. Do you want to check this? At this level of sale, EBT will be zero. Do you wish to check this? This we will check. Seems little interesting. Let us check. Let us verify the same. Okay? Start. Variable cost 56%. 12 lakh 83,333. Contribution 10 lakh 8,334. Fixed cost. Sales value is coming to 2292. Yes. But I took full point, Bhuna. I took full point. I took points also. 69.44444444. In my calci it was there, so I took that. 2292 also correct. This also correct. Understood? Don't worry. Both correct. 33 rupees difference. I took 69.444. So yours is also correct. No problem. 6 lakh. Rounding difference it is. Four zero eight 334. How much is interest? Hey, 4 lakh 5,000. I think rounding of difference is coming. Rounding of difference is coming. Otherwise, it is okay. Rounding of difference is coming. Otherwise, it is okay. Small rounding of difference is coming. Answer is 2292. Okay. 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 Rounding up difference coming to 3,000 of point. Shall we go ahead? Finished? Okay. Rounding off difference coming 3000. Let's move on to the last part. If EBIT will increase by 20, how much will EBT increase? Okay, let's do it. EBIT 20, EBT how much? So formula FL, financial leverage. Percentage change in dependent variable EBT upon percentage change in independent EBIT. First of all, how much is FL? How much is FL? How much is FL? FL 1.18. Tell me, what is percentage change in EBIT? 20. 23.6%. This leverage also we round off. No, if you don't round off leverage also, this 3000 also will match. If you don't round off leverage also, it will match. So if my EBIT will increase by 20, okay, due to fixed financial cost, EBT will increase by 23.6. Okay, please write that. If EBIT will increase by 20%, if EBIT will increase by 20%, EBT will increase by EBT will increase by 23.6%. EBT will increase by 23.6%. If EBIT will increase by 20%, EBT will increase by 23.6%. I hope you are clear. Yes, sir. Yes, sir. Yes, sir. With this, we are done with this sum also. Now, we will do the last concept, the last sum, guys. Stay tuned. Are you ready? Yes, sir. Sum number 6. New concept is there, preference dividend. If you are ready, only then I will teach. If you are ready, only then I will teach. New concept has come, preference dividend. When preference dividend is there, way of doing sum will change, the formula will change, the thinking will change, the attitude will change. The understood, sir. Understood, sir. Understood, sir. Understood, sir. Ready? Yes. Let's do this, but first of all, let me make you understand the formula. Okay? Now, all will be same. Let me start from EBIT only here. 1 lakh. Listen nicely, whatever is there. Concentrate now. Less interest 50,000. EBT is how much? 50,000. Less. Tax at 50%. So how much is the tax? 25,000. This is PAT, profit after tax, 25,000. Less. Preference dividend. Let's assume preference dividend to be how much? How much? How much? How much? How much? Any figure tell. 2 lakh into 9%. Let's assume 2 lakh is preference share capital. into 9%, 18,000 upon earnings to equity shareholder. Why not working? Oh, it became white. 7,000. This sum is clear first of all. This sum is clear. Okay, random sum we have found out. Okay, just like that, for time pass sake, we have drawn one sum. Listen very nicely, whatever is happening. Last concept, if you understand this, leverage is over. 1, 2, 3, start. Now, operating leverage, everyone knows, contrary upon EBIT, that will be no change. Whenever financial leverage is given, formula will change, thinking will change, attitude will change, culture will change, everything will change. Listen nicely. Can you tell me what is the meaning of financial leverage? It is risk in the business to do use of additional debt or total risk which we have to take due to fixed financial cost. Tell me, how much is fixed financial cost here? Can anyone tell me what is fixed financial cost here? How much is the financial cost here? How much is the financial cost here? Can anyone tell me? Can anyone tell me how much is the fixed financial? See, what's financial leverage? It's the impact of fixed financial cost. More borrowing is equal to more leverage is equal to more risk. How much is fixed financial cost here? Some are saying, lot of answers came. 50,000 number one answer. Number two, 68. Number 3, 68. Number 2, 50. Number 4, 68. Okay, till now there was no preference dividend. 50 is correct. Unfortunately, all of you are wrong. The answer is 86,000. Yeah. From where you brought this figure? Hey, absolutely cheating. Cheating. Now I will tell you from where I brought. Formula. Formula. Formula forget. First tell me. Okay. 50,000 to all understood. So this we will not touch also. Cross. Cross means you understood. Now, according to you, it's 18,000 of fixed cost. No. To pay 18,000, I need to pay tax first. Okay. Had I not paid tax of 50, I would never be able to pay preference dividend. See, tax interest is tax deductible expense, but preference dividend is after tax. After tax, to pay 18,000, I need to earn income of 36,000. Come here, come here, come here. If I earn 36,000 here, let's pay tax of 18, left over 18. Only then I can pay 18 and it will become 0 here. If I don't earn only, okay, you want to pay 18, you want to pay 18, understood? Come here, come here, come here, come here. I want to pay 18. Now if I earn 18, can I pay 18? I am earning 18. Less government is taking from me 9,000. How much is left over? 9. I can never pay 18. Understood? Understood? I can never pay because money is only not there. How the hell will I pay? So to pay preference dividend of 18, I need to do it before tax. Because if I don't pay tax, I cannot pay dividend. Why in interest we did not do like that? Because interest is before tax. But preference dividend is not a tax deductible expense. So I need to pay actual preference dividend of 18. I need to earn 36,000, out of which 18 government will take and rest 18 will go to preference dividend. I hope you are understanding. So whenever we calculate impact of preference dividend, I have to do preference dividend upon 1 minus a tax rate. So if preference dividend is 18, 1 minus 0.5, 36,000. My actual cost in this case is 36. How did you get it? How did you get it? How did you get it? One last time. Okay, let's assume I had earned only 36,000. Less tax will be how much? 18,000. That is how much? 18,000. Preference dividend how much? 18,000. Understood? Understood. To pay this 18,000, I need to earn not 18 but 36. To pay a dividend of 18, I need to earn 36. If I earn 36, government will take some, only then I can pay. If I earn only 18, I cannot pay. I cannot pay. I cannot pay. To pay this 18, I need to earn 36. If I earn 36, some government will take leftover portion, I will pay the dividend. You have to understand. So actual fixed cost is not 18, but it is 36. My last question, why did you not do this year? It is anyways before tax, but preference dividend is after tax, so I need to convert before tax to know the actual fixed cost. Though this fixed cost actually is 18 only, but government is taking some amount of fixed cost, that is also fixed cost. I cannot say to government I will not give you, but I will pay dividend. Government tight slap. So actually out of this 36, okay, 18 is taken by Narendra Modi, 18 is paid to preference shareholder. But for a company like TCS, for a company like Reliance, for a company like Infosys, their actual financial cost is 18, because they also have to pay to government, otherwise they cannot survive. So I have to calculate impact of actual cost and not net cost. See, I have to see the impact of total financial cost. Total financial cost is not 18, it is 36, because what I have to pay to government, though it is not paid to shareholder, but it's still included in fixed cost. If I don't pay to government, I can never ever pay to those shareholder. To pay to shareholder, first government will take its cut. Let's take second example. You are paying a fees of 50,000 plus GST. Now company will tell, "Arey, GST cost not for us. Okay, that to goes to government." You are like, as a student, I have to pay no GST. As a student, I have to pay 50,000 plus 18, 59,000 fees you are paying. So now those class will tell, our fee 50 only. Sir, don't lie. 9,000 GST is there. That also I am also paying. No, but that goes to government. But for me, cost is 59. I don't care. It goes to government or teacher. I have to pay this much. Same way for company. To pay 18, they need to earn this much. Shall I explain more, or you have understood the logic? Shall I explain more, or you have understood the logic? Now, if you have understood, let me calculate how did I get this 86,000. 50,000 plus 18,000 divided by 1 minus 0.5, that is 0.5. So 36. So 86,000. You are not replying means you have not understood. If you are not replying means you have not understood. Have you understood or no? If you are not replying means you have not understood. What about others? So now my formula will change. Formula will change. Tell me what will be the formula? Whenever there is preference dividend, formula will be financial leverage is equal to EBIT upon EBT minus preference dividend 1 minus tax rate. Understood? 1 minus tax rate. This is the formula. This is the new. Why? Because I need to see the total impact of preference dividend. Total impact will come when I do 1 minus tax rate. So I get before tax figure of financial cost, out of which some government will take, some I will pay to shareholder. Okay, this is the new formula. Whenever dash is given, preference dividend. Okay, and that another formula will also change. Another will also change. Percentage change in EBT upon. Now I will write percentage change in EPS upon percentage change in EBIT. Why did you write EPS? Because that is after preference dividend. That is after preference dividend. Yes, added tax. In this formula, automatic added. Sony is telling add tax. Automatic added in this formula. Once you calculate, you will understand it's automatic added. 18,000 upon 1 minus 0.5 will make it 36. Tell me now combined leverage. If it is preference dividend, combined leverage also change. EBIT cut. What will be the formula? percentage change in EPS upon percentage change in sales. I hope you understood. Understood? Just write there. Just write there. Important note. Whenever in the sum we have, write a note. Whenever in the sum we have preference dividend, whenever in the sum we have preference dividend, we need to calculate, we need to calculate its impact before tax. We need to calculate its impact before tax because preference dividend is a net of tax, because preference dividend is net of tax, and because preference dividend is net of tax, and we cannot pay preference dividend, and we cannot pay preference dividend without paying tax, and we cannot pay preference dividend without paying tax. So for a company, total effect is tax plus preference dividend. So for a company, total fixed cost is, so for a company, total fixed cost is tax plus preference dividend. So for a company, total fixed cost is tax plus preference dividend. Full stop. Leave one line. The new, if there is preference dividend, formula for financial leverage will be, if there is preference dividend, comma, formula for financial leverage will be, if there is preference dividend, formula for financial leverage will be, copy this. In magic book it is written, don't worry. Magic book is our summary book, the closing book, the final book, the magic book, truly magic book. Usually we do EBIT minus EBT, but here also one more fixed cost I need to consider, preference dividend. Wrong. But before tax I need to take, because to government I am paying, that is also fixed financial cost for a company, because unless it pays, it cannot pay dividend. Or you can also write this, percentage change in EPS upon percentage change in EBIT. EPS, it is a earning per share. Over. If you are done, type Y. Chalo. Now we'll do one sum. You might feel little like this, time is over, but if we don't do this, no use doing the sum, no use explaining. Okay, so we'll finish this sum and then go ahead. Okay, take a break, long break, and come back nicely. If we don't do this sum, it's all waste. I will explain, then again after the break I have to explain again, that is why. Okay, start. Operating income of a firm is 186. It pays 50% tax. Okay. Capital structure is operating income means what, right? EBIT. Debenture this much, preference share this much, equity share this much. Okay. EPS you have to find out. Determine the change in EPS associated with change in EBIT. FL formula I will calculate and find out. Degree of financial leverage I need to find out. Okay, easy sum. It will take 5 minutes. Ignore everything. Come to sum number 6, income statement. Let's draw financial leverage. After that 5 minutes sum over. Sum number 6. Income statement of nothing given. Directly we can start. Just give heading income statement. We are told to start from EBIT only. How much is interest? 5 lakh into 14%. 70,000. 1,16,000. Less tax is 50%. 58,000. No doubt till here, PAT will come, profit after tax. Go ahead. Yes, sir. Less preference dividend, 15% of 1 lakh. Earnings to equity shareholders. See, PAT is earning to both. After preference dividend, what is? YouTube, nothing is done, guys. SM Fast Track already 4,000 students have purchased. What about them, Chris? For those of you who don't know, India's best lecture of FM, SM Audit are available. Directly buy. Don't even ask. If you ask, also 5 minutes waste. In that 5 minutes, we can learn preference dividend concept. Earning to equity shareholder is how much? 43,000. Now, will I find the EPS? Yes, sir. But I need to calculate financial leverage. No. EPS also let's calculate. Number 1, EPS. I hope you know what is EPS. I hope you know what is EPS. Earning to equity shareholder upon total number of equity share. Total my earning this much. How much one share is giving to me? Baby, one share giving to me how much? See, 100 rupees each. 4 lakh upon 100. 4,000 share. Are 40,000 will come, sir. No, 4,000. Why? 100 rupees. Okay, don't shout, sir. 10.75 rupees per share. Per share. Now I will calculate financial leverage. Third. EBIT upon new formula, baby, new formula. Why new? Why new preference dividend has come? Preference dividend alone will not come to pay preference dividend. Government will ask tax also. That is also my fixed cost. What is my EBIT? 186. What is my EBT? What is my EBT? What? 116. What is the preference dividend, sir? What is the preference dividend, sir? What is the preference dividend? 15. But actually it's not 15. To pay 15, I need to earn 30 because 15 government will take. 2.16 is to 1. Over. Amazing, mind blowing, excellent, wonderful. 2 figures I got. If you are done, let me know. Done, then type Y. Now 2 and 4 are pending. This by mistake is a 4. 2. Determine the change in EPS with 30% change in EBIT. EBIT will change, then EPS. I told new formula will come. Preference dividend, percentage change in dependent upon independent. EBS is dependent, independent EBIT. Just write there. Financial leverage is equal to percentage change in EPS. Why? Because I need to show the impact after tax upon percentage change in EBIT. Financial leverage already I found out. 2.16 is equal to percentage change in EPS upon EBIT 30%. 64.8. Now we have to write a conclusion there. We have to write a conclusion there. Right there. If you are done with this, right there. If EBIT will increase or decrease by 30%. If EBIT will increase or decrease by 30%, EPS will change by. If EBIT will increase or decrease by 30%, EPS will change by 64.8%. EPS will change by 64.8%. Last thing, guys. Last thing. Last. What additional data you need to calculate operating and combined leverage? If I want to find out operating leverage, what data I need? You have to type that and we are done. We don't need to calculate that. They are just asking what data you will need to calculate operating leverage. Formula I will speak if you want. Country upon EBIT. What data I will need to calculate operating and combined leverage? What extra data you will need? You have to tell me. I don't know. I don't know. Understood formula you are telling. Srinivas has rightly answered fixed cost. If I get fixed cost, I will do reverse right contrary. After that, I will get OL. OL into FL is CL over. I need only one data, baby. Fixed cost. If you give me fixed cost, I will add back, get contribution. Contribution upon EBIT is operating leverage. Operating into financial is combined leverage. Only one thing required. Understood? Right there. Fourth. Change to fourth. Right there. If we get fixed cost, we can calculate contribution. If we get fixed cost, we can calculate contribution and then calculate. If we get fixed cost, we can calculate. What did you write? Contribution and then calculate. If we get fixed cost, we can calculate. What did you write? Contribution and then calculate operating leverage and combined leverage. And then calculate operating and combined leverage. And then calculate operating and combined leverage. Okay? Yes, sir. Yes, sir. Yes, sir. Okay. How many sums are pending? Tell me now. Two or even more? Two are pending or more are pending? How many sums are pending? 10 is pending and 12. Except 10, 12, I think all over. Only 2 are pending, 10 and 12 or more. You also don't know. Okay, find out. According to me, only 2 are pending. If more also, we will do. Okay, see you after the break, 10:30. Bye bye. Good night. Take care. Thank you.